guys took this company from 3 million in EBITDA to 2.5 billion in 3 years. Can you have a better proof than what I'm showing to you right now about how good this company is? My name is Tom Nash, and I quit my corporate job as a senior financial analyst to break down companies for you. If there's one thing you need to know about me, I don't take bullshit from anybody. Hey, this is Tom, and in this video, I want to talk to you about the Tesla Q2 financials. Now, I specifically, intentionally took an extra 2 days to analyze these. I did not want to rush out a video just to get some extra views. I wanted to make sure that I give you some extra value by going deep. And deep I went. And I found a few hidden gems that literally nobody else has mentioned. Because I guess when you rush out to make a video real quick just to get the extra views, you don't have the time to do the deep analysis. But you guys, the channel members and the patrons, allow me to give up a few views to give you some quality work. So check this out. Before we get started, I ask one thing and one thing only. Don't click nothing, don't smash nothing, don't buy nothing, don't subscribe to nothing. Just give me your attention and I promise to deliver a banger. So check this out. Before we get started, I want to quote to you an analyst who shall remain unnamed for this video, which said, I expect Tesla profitability to go down this quarter because of the decline in regulatory credits. Now, regulatory credits did decline, in fact, by 17% to 350 million. But as you can see right here, the GAAP profits went up by 704 million. So how'd that work out for you, buddy? Not so well. Now, jokes aside, I do want to point out that Tesla had a breakthrough quarter. In fact, this is the first quarter where the company went above 1 billion of net income in a single quarter. That's a huge milestone, especially considering a pandemic year, a chip shortage, and a total decline of 17% in regulatory credits. Now, those 17% doesn't really tell you the whole story. This regulatory credits quarter, 350 million, was the lowest Tesla had since Q4 2019. So it's not only lower, it is the lowest in the past 2 years. Despite that, the company still managed to increase every parameter considerable as far as EBITDA, as far as net income, as far as the margin. Everything went up like crazy, and none of it has to do with regulatory credits, and that's why the decline in regulatory credits did not affect that. And I think that's a good time to put this whole regulatory credits nonsense argument to bed. I think these financials actually put an end to this stupid argument. Now let's move on. And at this point, I want to go through the financials with you and show you the trend. If you look at 3 years back and you analyze the financials over the course of the last 3 years, there's a very clear picture about the trajectory of Tesla, which I think a lot of smart analysts and a lot of reporters are missing. I'm not talking about the ones who are doing it on purpose. I'm talking about the ones who are trying to be fair and objective. And in this video, I'll show you something very interesting that you have never seen before. And at this point, I want you to take a look at the trend because sometimes these numbers don't really mean a lot on a standalone basis. However, if we pull up these numbers for the past 3 years, you can clearly see exactly what's going on with Tesla and where Tesla is headed. And I think these 3 metrics are really important. The vehicle deliveries, the operating cash flow, free cash flow, net income, and EBITDA. Because those are the main metrics of the company. Now, first of all, look at vehicle deliveries. Without even looking at the numbers, what do you see here? You can clearly see a slow incline and then the beginning of a parabolic rise. Now, if you look at the operating cash flow and the free cash flow, you can clearly see the same trend. For example, the free cash flow is kind of stagnating there, and then all of a sudden you have this meteoric rise. The same thing with the operating cash flow. Look, stagnating and then meteoric rise. You can clearly see that this is a breakout year for Tesla, and yet because of mainstream media FUD, nobody is really noticing, which creates an insane opportunity for us to get more shares at a reasonable price. If you look at net income, which is marked in blue, you can see the journey all the way from this negative point to this positive point. It's almost like a flipped upside down chart. It's the upside down world from Stranger Things. The same thing with EBITDA. EBITDA is one of the most important metrics for me when I look at a company. Look, where they started, where they're at right now within just 3 years. This is insanely impressive. And this is the perfect example. When in doubt, just zoom out. And now I want you to pay attention to the balance sheet, because a good balance sheet is kind of the report card of the financial management of the company. Right now, we have a company with 16 billion in cash, 55 billion in total assets. Even if we take out this $500 million of goodwill, it's still pretty much the same numbers. Total liabilities of 28, 29, which means almost double assets than liabilities. But wait, there's more. Let me show you some cool little nuggets. Now, this part of the financials, nobody looks at. It's kind of like the back of your fridge where food goes to die. But you know me, I dig through it because there's a lot of golden nuggets which can tell you a lot about this company. So let me show you a few little examples. Now, let's take a look at adjusted EBITDA right here. And just forget the numbers. I want to show you scale. So right now we have 2.5 billion in actual EBITDA in Q2 2021. Look at what they had at adjusted EBITDA just 3 years ago. 3 years ago. 3. I'm not saying 3 billion. 3 million. This company went from 3 million of EBITDA to 2.5 billion in EBITDA in just 3 years and a quarter. Show me another company that can do that. And then you have all of these FUDs and the naysayers pretty much saying that, well, this is a regulatory credits company. They're not really profitable. Mother lover. These guys took this company from 3 million in EBITDA to 2.5 billion in 3 years. Can you have a better proof than what I'm showing to you right now about how good this company is? And let's talk about automotive revenues and automotive gross profit, because that's where the company is measured, not regulatory credits, automotive. So as far as automotive revenues, it's 10.2 billion, which is 100% year-over-year increase. Now the automotive gross profit is even better, 2.9 billion, which is 120% increase. Not to mention that the automotive gross profit went up from 25.4% to 28.5%. That's insane. Again, considering the supply chain issues, the pandemic, the HR issues, the chip shortage, everything. And the company still managed to improve the automotive gross profit, all while increasing operating margin from 5.5% to 11%, literally doubling it. And of course, we have to talk about EBITDA, because what kind of a Tom Nash video would this be without an EBITDA discussion? So EBITDA went up to 2.5 billion. And in case you're wondering, that's 106% year-over-year growth. What about production? What about deliveries? Well, what about them? 201,000 vehicles delivered, 206,000 produced, 150% more production, 121% more deliveries year-over-year. This company is literally going to the moon. Now we can talk about the 600 plus free cash flow this quarter. We can talk about the 16 billion they have in cash. We can. But before we dive deep into the financials, let me share with you a few hidden gems that nobody is covering, because this is actually important. So the first thing we have to talk about is the energy business. If you look at the financials, you find that the growth of their energy business is insane. In fact, solar panels are up 215%. Storage is up 204%. These growth numbers literally triple than the automotive growth. This is so good that they've literally stopped selling the storage, the power walls, unless you buy a solar panel. They literally can't make enough of them to meet demand. This is the next big wave of Tesla. And if you're not smart enough to see it, this is literally hitting you in the face. Look at the energy business. It's growing like crazy. And there's also another hidden gem that you absolutely have to see, because we actually got confirmation that Tesla is going to do over 1 million vehicles this year. Now, if you look at the outlook section of the financials, there's clearly a statement there being made that Tesla is aiming to a 50% annual growth in deliveries, and that this year, as well as certain other years, they're going to exceed that. Now, if you take a look at 2020 deliveries, that's 500,000 vehicles. If you do a 50% growth, you're talking about 750,000 vehicles. What they're saying here is basically that this year, we're going to shoot past 800,000 vehicles. And trust me, this isn't going to be 20 or 30,000 vehicles. In that case, this statement doesn't even get made. The fact that they've made the statement in the outlook section, in the summary section of their financials, means it's going to be a big overshoot. Probably 1 million cars. As I said a year ago, 1 million cars this year. Finally, I think we have a hard confirmation, basically as much as they're allowed to do based on SEC laws and compliance without overpromising things. And of course, as always, we have an Elon statement that becomes controversial and everybody talks about it for a whole week. Now, during the actual call, which I'm assuming most of you did not participate in, Elon actually dropped a bombshell. He basically said, well, I don't think I'm going to be doing these calls anymore. I'm going to let my team do it. And of course, all of the fraudsters, the mainstream media, and the shit analysts jumped on his throat, basically saying, Elon doesn't care about Tesla, blah, blah, blah. I find it insanely ironic. These are the same people who complained year over year that Elon is doing a poor job at these calls, and now they're complaining that he doesn't want to do it anymore, and he wants to let somebody else do it instead of him. This is the definition of irony. But beyond that, it's actually a good news kind of thing. Let me explain. Trust me, for a guy like Elon, it's like for Pickle Rick to go to therapy in Rick and Morty. It's boring. He doesn't want to do it. It's a task. So for him to get out of it, it's kind of natural. But Elon is also extremely centralistic. He likes to keep things next to his chest. He likes to be the guy who micromanages everything. He's a control freak. He has a God complex. For him to say, I'm giving up a little bit of the control and I'm going to let my team handle this from now on, says a lot about what Elon thinks about the maturity of this company and this management. It's a great sign. Essentially, Elon is saying, this company is ready to spread its wings. It doesn't need me on every single call. It's good news. Not to mention that Jeff Bezos doesn't do these calls. Even Alex Karp doesn't do these calls. You want to talk about Warren Buffett doing an annual thing? Yeah, he's like 147. This is the highlight of his year. These calls that he does once a year, the shareholding meetings. I mean, that's a huge event. But I'm saying in general, big companies don't really have their CEOs on their calls if they trust their management. It's a kind of good news thing that's going to be interpreted as a bad news thing by mainstream media. Just be ready for it. Now, they're also going to spin the Cybertruck story, basically Tesla delaying Cybertruck for next year, saying, well, look, Elon is late again. Yeah. And again, a good news thing becoming a bad news thing. Essentially, would you rather have a company that launches a truck off the top of a hill without an engine just to make it look good? And you all know which company I'm talking about. Or a company that says, well, we're going to delay it by a year because we're not willing to put out a product to the market that is not up to par as far as our standards. And I think I'd rather invest in the latter, not the first. But again, to each their own. Now, there's one more thing we absolutely have to talk about, which is what's going to come out of this. Mainstream media is going to be saying, well, this is a good quarter for Tesla, but I mean, we expected more. What more did you expect? I mean, at this point, it's hard to satisfy the appetite of mainstream media to bash Tesla. But since we've all seen it again and again for the past 2 years, we've now become immune. But again, we can still look at the bright side. At least we finally demolished the they make money from regulatory credits argument. Now it's dead. However, now we're moving on to the second piece of these arguments. China is heating up. More competition in China, more competition in the US, more competition in Europe. We've been hearing this competition is coming for the past 3, 4, 5 years. I mean, this is a narrative that mainstream media has been pushing on us for a while. This is a joke at this point. Look at the competitors and the stuff they're putting on the market as far as price, quality, and the infrastructure. This is ridiculous. So there you have it, ladies and gentlemen. Tesla just had a phenomenal breakout quarter, probably the best I've seen in a long, long time. Ignore the FUD, ignore the mainstream media, and make your own decisions based on math, information, and actual analytics. Now, I'm not a financial advisor. I'm just a guy on the internet, and this is just my opinion, which means it might be inaccurate, might be wrong, might be the ramblings of a madman. You still have to do your own research, allegedly, blah, blah, mother effing blah. And by the way, a huge shout out to the channel members and the patrons. You guys allow me to take 2 days to make this video instead of rushing out a bullshit video. Thank you so much. We just wrapped up a Zoom call with my patrons and members just a few minutes ago. We had a blast. If you want to join, it's $5 per month and you're going to be supporting the channel. I mean, what's good? What's bad? It's just a thing to do. I don't know what I'm talking about. I'll see you guys in the next video. I'm just fucking around. I'll see you guys next video.